Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to our special show Newsmakers, and the newsmaker of the day, of the week, of the month, maybe even of the year is Kumar Mangalam Birla for creating outstanding value for shareholders of Grasim. Mr. Birla, congratulations first. Even if I looked at the math on the day of demerger announcement, July 18, 5 shares of Grasim was 6,500. Today, those 5 shares itself is 7,500. I mean, in just a span of a month, it's 15% more. Technically speaking, only for the finance wing, I think you've almost created 60% more value. So congratulations.
Thanks, Latha. I think to put it in perspective, we've created about 60,000 crores of value, both for shareholders of Grasim and of Nuvo. So if you go back in time, at the time of announcing this composite scheme, where Nuvo merged into Grasim and the financial services business demerged subsequently from Grasim and have got listed today as one entity, Aditya Birla Capital. So if I look at the market cap of Grasim and of Nuvo as they existed at the time of the announcement of this scheme, and if I look at the market cap of Grasim and AB Cap today, it's a difference of about 60,000 crores. We moved from a market cap of 60,000 crores then to 120,000 crores now. So that's been a huge return for our shareholders. And like we said at the time of the announcement of this transaction, that's what's driven this whole transaction. The fact that we wanted to unlock value that has been created over the years for the shareholders of both of these sets of companies.
No denying that. It's probably a financial powerhouse that has come into existence now. But within that, there are several entities which can be powerhouses in their own right. Insurance valuations are going through the roof, as are pure NBFC companies. Would you ever think of demerging further?
So we have no plans, Latha, in the foreseeable future to list any of the verticals that exist today in ABC. I think this is a very credible, very substantial step towards value unlocking, like I just said, and no plans to list any of the verticals as we speak today.
But valuations are mouthwatering. I mean, you have even a private wealth management company, a private equity company. Wealth managers are quoting at crazy valuations today.
But you know, I think we've created today a holdco for the financial services businesses. It also gives us a currency for making, value-creating moves in the future if at all we need to. It gives us access to capital much more freely, easily. So really don't have the need to list any of the verticals separately.
No, for instance, insurance, life insurance. For one thing, it's being regarded very valuable, and that's why you're seeing the HDFC Lives and the SBI Lives all making a beeline to list. In your case, Sun Life can also be, you can buy part of their stake. If you list, there are infinite potentials potential both for Sun Life and for you to create value. So not even for insurance, you would think of demerger?
We have no plans to do that. So I think I'd say that each player in this space has their own script, given their own circumstances, their own ambitions and plans for the future. Okay. We have no plans today to list
Would you buy Sun Life's capital or something? I mean, any other within the group itself?
Sun Life is very committed to India and to this joint venture in particular. Okay. So they're not a seller, and we're very happy to have them as a substantial partner.
Okay, so the equity percentage of the JV partners is likely to remain the same in the foreseeable future? It
will remain the same, 49% for them and 51% for us.
Okay. Well, the other question that comes up in the capital issue of AB Capital is that Grasim holds 57%, and Grasim has responsibilities towards Idea. It's a flagship of your group. So would Grasim want to sell, maybe come down from 57 to 51, 50 or 49, just so as to capitalize Idea?
So we have no plans to do that at all, Latha. This has been a question that's been doing the rounds every now and then in the last year or so. And we have said categorically that Grasim will not fund Idea's plans for growth and for market repair, as if I can call it that. Idea is pretty self-reliant. It hasn't really accessed funds from any other group company. We've never really done that in the last 25 years as a philosophy, and there are no plans to do that now as well.
Okay. When do you expect that Aditya Birla Capital itself will need capital? After all, NBFC is a voraciously growing business, and even your NBFC unit itself is growing at some 40%. So if it were to need capital, when will that be?
So we've said in the past that we are happy to look at selling about a 5% stake at max to a financial investor. I don't think we're in a hurry to do that because we have sufficient capital as of now. But then that's also a function of how fast the NBFC continues to grow. It's grown at about a 44% CAGR in the last 5 years, which is substantial. But we have the currency, like I said, now. And like I said, up to 5% is something that we're very comfortable with.
You know, this is one of your huge cash-generating business or profit-generating business, as is Grasim, which is why this thought keeps coming back. Hindalco also is a fantastic performer at this point in time. Aluminum is almost as good as gold or better, but it has debt, and so has Idea. Will it ever happen that any of these cash-generating machines will be, used to reduce their debt, Idea and Hindalco?
So Hindalco's debt is very much within manageable limits. It has no issues about, any concerns about debt at all. It will have a debt to EBITDA of about 2.5 at the end of this financial year, which is a very, very healthy financial situation to be in. Like I said, Idea has an issue with debt just now. We know what's happening in the telecom industry. And I think it is going to be a tough phase for at least a few more quarters. That's at least what we estimate as of now. But like I said, Idea has its own plans to monetize assets, to raise capital in one form or the other. No plans at all for any group company to fund Idea in any which way.
Okay. Well, what about stressed assets? I mean, you spoke about stress, yes, in telecom, but that's not much compared to the way you see stressed companies making a beeline to the bankruptcy courts. Would you, or whether within Aditya Birla Capital or outside Aditya Birla Capital, be interested in buying these assets?
Very much so. So we would see it as a financial play in terms of being a part of ABC, not to buy these assets as strategic assets for our businesses. But I think that the group has great operating strengths and experience across sectors. Absolutely. Over the last so many years. That, along with this new vehicle, ABC, gives us the gunpowder, so to speak, we've also, for example, applied for an asset reconstruction company, a license for that with the RBI. So distressed assets is a situation that we are very interested in.
Okay. Will this ARC be coming under Aditya Birla Capital, a subsidiary of
That's right.
AB Capital?
That's right.
Okay. So by when do you think it is up and running? How far is the license?
So early to say. Like I said, we've applied for a license, yet to get it. In no hurry to start up. We're still looking at plans. We're looking at how we can make a difference, make a superior return, so on and so forth.
Okay. But your private equity unit can also at the moment take a strategic investment.
Can also take up a distressed assets, floated distressed assets fund, which is a possibility.
Is it something on the anvil?
Nothing on the anvil,
the need
but it's a very credible option for them.
Okay. But aren't you already looking, lots of power assets, and that's something in which you all have some experience. Steel, I guess, is not your industry.
We haven't really thought about specific sectors, haven't gotten down to that kind of granularity.
Okay.
But suffice to say that as a business of turning around stressed assets, it's a space that we are keenly interested in.
But is there any specific sector of turning around
no, not
or
really,
the
not
entire
at all.
game?
I think that we're agnostic to which sector.
Okay, okay. No, a lot of them will come into, the bids will start opening. In fact, bids have already started coming for a couple of them. They'll start coming in 2017 itself, and of course many more will come in 2018. So should I see the ARC as well as the private equity getting into granularity as early as 2017 or early 2018?
I think financial year 18-19 will be the right time. There's no hurry. We've got to sort of firm up our plans, get our act together before we can actually start to do business in that space.
Which of your business you think will run the fastest? You have NBFC, life insurance, housing finance, health insurance, private equity. Which do you think?
Most of these, I think the NBFC for sure, life insurance, health insurance is a new one that we've launched and has taken off to a good start. I think all of these, housing has done very well, affordable housing. We're talking about, like I said, a potential foray into the ARC business. So I think all of these cumulatively will add to the growth of ABC.
Okay. Well, finally, let me ask you, I mean, you have a vantage point where you see a bunch of industries. You see how cement works, you're seeing how metal works and textiles. What is the sense you are getting about where India is in the growth cycle? Has it troughed out, or will this be a U-shaped and, we're going to see a little more slowness before speed picks up?
So I don't know about shapes, Latha, but I think that manufacturing is something that has yet to pick up.
Okay.
And I think that goes back to the problem of distressed assets, which impairs the ability of banks to lend. And I think that the RBI, the banks, the government are very appropriately focusing on the issue of resolution of NPAs, which in turn would free up the balance sheet of companies and give more leeway to the banks to lend. I think that the government is doing all the right things, and given the fact that this is a very complex situation and India is a very complicated country to work in,
yeah,
I think it's only natural that it will take some more time before things start to look even better.
But do you see green shoots, for instance, say in cement? The government, after all, has given a lot of orders. And
I think there are segments of infrastructure, for example, where the government has started to spend substantially. And I think it will have to be a step-by-step process. Like I said, it's a very complex country and several issues to look at the same time. And I think that the government seems to be getting their priorities correct.
Okay. Well, again, since you look at so many industries, you're looking at aluminum, textiles, telecom, now financial services. Which is your favorite child?
You can't play favorites. I think that we believe in each of these businesses, which is why we are in these businesses. I think each has their own competitive landscape, their own sort of challenges, but I think all of them have very interesting growth opportunities, which is why we are in them.
Okay. No, which do you think runs the fastest as of now? As of now, when you look at these four major verticals.
Our current stable of businesses, obviously, financial services is a vertical that's the fastest growing. Just given the fact that India is so hugely underpenetrated in terms of the use of financial products and services.
No, that certainly is the case. At the moment it's running hard, but say, for instance, cement, do you see that on an uptick now, considering, there are a lot of projects that people are talking
I think
about?
so. I think that as the government is stepping up its spend on infrastructure, you're going to see robust demand for cement going forward. So I remain very bullish in terms of demand going forward.
And there's one more industry which I didn't touch on, retail. I mean, retail also is picking up. We are seeing the shares do well, and we're seeing, footfalls also improving. Consumption is the theme. So do you see big plans for your retail forays as well?
So we have a separately listed fashion retail company.
That's exactly why.
And I think the company is doing well. We are seeing a month-on-month increase in SPSF in every sort of parameter that you look at.
On breadth, and we've seen the Tata's tie up with companies like Zara. So are you also taking Aditya Birla Fashion to that level where you are, going to
well, they have a few tie-ups already, like Hackett, for example, and there's a whole slew of initiatives in the pipeline on that front.
Okay, so is that the next big game, retail?
Well, I think that is a very interesting game in itself. Again, a big growth story. It's a mega trend in terms of higher spending capacity and the demographic of being a much younger population that business plays to.
You have given me a rain check for a more detailed explanation and a detailed description of your plans in other verticals.
Sure.
Thank you very much. Welcome back to Newsmakers. The newsmaker of the moment, in fact of the week and of the month, is Aditya Birla Capital. And now I have the CEO of that company, Ajay Srinivasan, joining me. Ajay, first of all, congratulations. Welcome back to Newsmakers. The newsmaker of the moment, in fact of the week and of the month, is Aditya Birla Capital. And now I have the CEO of that company, Ajay Srinivasan, joining me. Ajay, first of all, congratulations. We were all expecting an AB Capital listing at the outer limit at 218. My table did not even run beyond it. This surprised you?
Well, I think we're pleasantly surprised, let's say. I think it's a strong validation from the market that our business model works. It's a bit humbling when people from the market put a value on the business that you spent so many years building. But we're very satisfied and happy with it.
Yeah, but this is also first day euphoria, and we could see that in the circuit filter and all that. Right. Do you think it'll correct? Is this the valuation that you as an investor would have given it?
Difficult to say, Latha. I mean, I think I'm always going to be biased about my business. So it's difficult to say. I mean, this is a market, so many variables. I can't really comment on that.
But could you even investigate who was so enthusiastic in the pre-open that it kind of marred your first day celebrations?
No, actually, nothing's marred our first day celebrations. I think we're very happy with the way it's come through. Just getting a valuation more than 50,000 crores in a market like this, I think is testimony to the business that we've built.
Okay. Well, no, it's just that now when the filter opens, there will be people who will want to sell. So I was asking you, where do you think it might settle?
Difficult. I really don't know what the book is like, what the buying and selling is going to be like. But it's early days. It's still in in the cash-based delivery. So I think you're going to see a little bit of volatility probably for a while.
Okay. Well, now let me come to the business itself. NBFC, life insurance, AMC. Which do you think is going to be your flagship within these units?
So I think we are different from many other players in financial services because we have fairly large businesses underneath Aditya Birla Capital. So our life insurance business is a top 5 business, asset management is a top 5, NBFC is top 5, our general insurance broking is a top 5 business, we have a personal finance portal which is also top 5. So we have a number of businesses where actually we have scale. If you ask me a question where we think the next 3-5 years growth is going to come from, I think I would say our NBFC would probably lead the charge. There's just such a big opportunity there. We're well positioned. Credit is coming increasingly from non-bank sources, so there's a lot of tailwind we have in that segment. Housing, we are relatively new, so we still think there's a lot of opportunity to grow, especially as we go into the small towns. But I wouldn't underestimate the value of growth in the asset management business and the life insurance business, because let's just look at the fact that we're seeing so much money now coming into financial assets at one level and also coming into equity type assets at another level. And with real rates being where they are, I think you'll continue to see financial assets gaining. So we see again tailwind for both life and mutual funds. Our life insurance business last year grew at over 30%. First quarter growth is again similar. Asset management business is again growing faster than that. So there's a lot of macro things that are, I think, in favor of the businesses we operate in.
Okay. Well, let me take the weak link first, and I'm calling life insurance a weak link because if you compare the persistency ratios, whether 13 months or 61 months, you rank perhaps 5th or 6th after the first 5 big boys, the HDFC, ICICI, SBI. Is there something that you will want to do in the life insurance business to pull it up?
So like I said, I think we've already started seeing the life business turn. Last year was a strong growth. We've seen that growth coming through in this year. Our focus really in the life insurance business is to sell more traditional policies. I think that works much better for us. Protection is an area of focus for us. We're selling longer term policies, focusing a lot on persistency as you mentioned. All of these are really going to mean that you start building much greater margins and a much greater value of the book we operate in. We've recently tied up with HDFC Bank under the open architecture regime. That opens up a large bank channel for us. So we've traditionally been agency focused. 70% of our business comes from agency. This opens up a very large bank network for us. So I think a lot of things are changing, and hopefully all for the better.
Yeah, exactly. Now that you are, until now you were subsumed under the group in various ways. Now that you're on your own, do you think there can be some game-changing move in, say, for instance, insurance?
So I think,
or in any of them, which one do you think there will be game-changing moves?
So I think the only thing that's really different from the past today is that we have currency.
Okay.
So I think the fact that we can use that currency for things and opportunities in the market is really what today has given us as an additional opportunity. So we will obviously look at opportunities across all the segments in which we operate: life insurance, asset management, NBFC, and wherever we see something that makes sense, we'd be very happy to look at it.
What can you give some number to the growth in, say, for instance, NBFC? That's your fastest running horse, over 30% even in the last.
So we've actually grown 44% in the last 5 years. So it's been a very quick clip. Last year alone we grew at about 35%. My sense is, you should see 25 to 30% kind of growth rates in the NBFC business. Our focus.
Life insurance?
So life insurance, like I said, we've seen 30% last year, 30% in the first quarter. So there's no reason why we shouldn't believe that kind of rate of growth shouldn't continue, at least for the foreseeable future.
Will you go the inorganic route? Will you want to buy any unit in NBFC? Or in life insurance for that matter? So
like I was saying, I think now that we have currency, obviously we will look at these opportunities, but it has to make sense to us from a value creation perspective, and I think that's where we often struggle in this market, because you don't always find obvious value from the opportunities you see. So that will be the filter that we will actually put all of this through.
But where might it come, you think? Are you more likely to buy an NBFC or more likely to buy an insurance?
Actually, if you look at it, Latha, across the spectrum, consolidation should be a theme that's playing out, because there are long tails in most industries in which we operate.
And it is playing, to be fair.
I don't think we've seen so many yet. I think, given the long tails, you should expect more. We've seen less. And I think that's partly because the expectation of buyer and seller hasn't met. But I think you should see opportunities as you go forward. I think you'll see opportunities in.
But you don't want to choose which one it might be. For that matter, housing finance.
Yes.
Okay, let me pick one of three.
Yeah.
Will you be going inorganic in housing finance, or in life, or in NBFC?
So we would look. What we would be looking for in each would be different. So it really then depends on the platform that comes up, and therefore in life insurance, I think a distribution platform will be very important for us to build. In home finance, we are still 5,000 crores book. If we can get scale, that could be interesting for us. In asset management, we're looking to build equity assets. Again, if we could get reasonable equity assets, that could be interesting for us. So I think it'll depend on what's available, and again at what price we can get.
What may be likely here in calendar 17?
I think hopefully you'll hear that the existing businesses continue to grow. We've had a very good and long track record of growing each business we start. We are good at setting up new businesses and building scale. We're good at gaining market share and therefore growing faster than the market. And I think hopefully doing more of the same, shouldn't be a bad thing.
Which will need capital in 12 months?
So our NBFC, our housing finance company, and our health insurance. These are the three largest consumers of capital at this point in time. I think the NBFC housing finance just need money to grow. Health insurance is a 5-6 year gestation business, so that needs capital to get to scale. That will be the primary consumers of capital.
At one point you all had plans that payment bank will be something that your finance company can piggy bank on, or the other way around. Is that plan still a viable one?
So I think given the idea of Voda merger discussions, that this has become a part of those discussions. So at the moment it's kind of, we're waiting for solutions on those issues before we kind of figure out what we do on this.
Okay. Ajay Srinivasan, pleasure speaking with you. All the very best.
Thank you, Latha.